Take a close look at any list of Ottawa's hottest startups, and you'll see a common thread connecting many of the city's most promising firms. The Capital Angel Network invests millions of dollars in early stage companies each year and closed 2020 riding a wave of momentum. With the new year underway, what's the angel investment outlook in Ottawa? What opportunities are investors looking for? And how can entrepreneurs position themselves to attract funding? We'll be exploring these questions and more this week on Techopia Live. Welcome to Techopia Live. I'm Peter Cavesi from the Ottawa Business Journal, and I'm joined today by two fantastic guests. We have Nolan Beanlands, the Executive Director of the Capital Angel Network, as well as Susan Richards, the co-founder of numbercrunch, one of the sponsors of Techopia Live. Welcome to you both.
Thank you. Happy to be here.
Thanks for having us.
Susan, let's start with you. Can you briefly introduce us to numbercrunch and how it works with local tech companies?
Absolutely. So numbercrunch is essentially outsourced finance. So we handle all your back-end support, and specifically to this conversation, we can help you get your books in order and help detail out that financial plan that can be used through due diligence to help you close rounds.
Great. And now, Nolan, I know you're probably more used to being on the receiving end of an elevator pitch, but give us a real quick introduction to the Capital Angel Network and how it fits in with Ottawa's tech sector.
Yeah, so the Capital Angel Network is a group of about 50 high net worth individuals who want to be investing in early stage startups, primarily based in the Ottawa region. And so a number of the companies that the OBJ and Techopia feature regularly have been backed by the Capital Angel Network.
Great. So the last time that we had the opportunity to check in was about, I think, the tail end of summer of last year. Obviously, we're coming off a very, very disruptive period, but there was a lot of signs of momentum that things were starting to pick up. Give us a little bit of an indication. How did 2020 end as far as angel investment go?
So 2020 really did end on a high note for us. We, beginning companies started to see some good opportunities in August and September. We actually held a meeting in the summer this summer because people weren't actually traveling. And that led to a much better quarter for Q4 for us, and in terms of deals closed and dollars invested, and much back to, I'd say, pre-pandemic levels. It was really exciting to see that, to feel that we were very much back. And I'd say the main reason is that, most of the time when you're angel investing, when you're pitching your company, you're trying to tell a story of, this is what the company is now, this is what we're going to look like in 6, 12, 18 months. And, during the months of March, April, May, June, it was very difficult for companies to do that accurately. Really, no one knew how long the pandemic would last, how many waves there would be, and what the impacts would be on their businesses and their sales process, et cetera. But as we approached the end of the summer into the fall, people really understood and had a better line of sight of, this is the reality for the next few months. And, this is the direction that our company will be going in, or, the world got used to selling and being sold to virtually. And the investors themselves got more comfortable with making investments in people they'd never met in person. So all those factors kind of tied in and ended the year on a pretty high note for us.
Are you able to share any metrics about the size of the volume of investments that came through in 2020?
Yeah, so in 2020, CAN invested just over $4 million into 20 companies, and so that is down about 75 to 80% of our numbers in 2019, which was reported by Techopia last year. But overall, I'd say that's given the historic nature of 2020, we're pretty pleased with how that went. Q1 did start very well for us. Q2 was actually okay because we still had some deals that were trickling in from pre-COVID. And we actually supported a lot of our portfolio companies who were looking for a bit of an extension, who were just, dealing with that uncertainty. And the angels really stepped up during that time. Q3 is where we saw a bit of a drop off. And that's where probably the most of that 25% gap took place. In that, we didn't see a lot of new opportunities in Q2 that would have closed in Q3. And as I said, Q4 was kind of back to business as usual. And we're excited that, and into Q1, into January here, I'm already aware of a few opportunities that are moving nicely, and it's definitely safe to say that we're back.
That's great to hear. Susan, I'm really excited to get your perspectives on this. We're into a new year. You're constantly talking to startups here in Ottawa. What are you hearing? What is the investment landscape like for these early stage companies right now?
Well, I think it's really great now. So I think we've had 3 quarters to get used to this and adapt. And now the banks, first of all, are able to lend more than they ever could. There's a lot of private equity out there as well for a bit later stage. And I think we're all getting used to, living with this uncertainty. It doesn't really feel as uncertain anymore. So from a revenue standpoint, it's still a little iffy for companies. Customers are perhaps behaving differently. There may be caution, slower close cycles. But for a lot of the tech sector, they're just as dependent on financing as they are on customer revenue. And so there's an ability to be nimble and refocus the energy on driving that fundraising effort now. And it's a great time because there's a lot of creativity and innovation happening too. People are really pivoting and being customer centric and thinking of new markets and opportunities more than I would say a year ago. If we go pre-COVID, I think we're in a better place today than a year ago for fundraising efforts. So I feel very enthused about where we are now. Felt differently maybe a quarter or 2 quarters ago, but now feeling good.
I think a lot of companies would echo that sentiment. I'd love to dig just a little bit deeper, just beyond sort of the numbers, beyond the overall sort of volume of deals, and sort of look at some of the trends that we're seeing. Nolan, when you sort of look at the types of investments that are being made, what are some of the sectors or specific opportunities that you're finding are particularly attractive to investors right now?
So right now, actually, the group itself has really begun to diversify, right? The Capital Angel Network was born out of the telecom industry. It evolved to a lot more of a software SaaS focus. And now we're seeing just a broader range of investors participating in the network, and those interests are now broadening. So 2 of our biggest deals this year were biotech. We've had a couple clean tech deals come through as well. We still, are investing in the more typical software SaaS type of activities, and those companies continue to do well pre and post pandemic. It's definitely been a massive boost. Obviously, there was a lot of press this week around Rewind's big close. They've done very well in a post pandemic world, and we're happy to be. I think we've invested now 3 rounds with them, and wish them all continued success as they grow. Another company that's seen great growth it was a new investment, was a company called Massive, which does file transfers for very large files done very quickly. And again, you can imagine that was a good company to have prior to COVID, but now it's absolutely kind of a necessity in most businesses, since you can't be, you have to be really disconnected and everything has to be done online. So it's interesting to see those companies get these tailwinds from COVID, as well as Go4 raised another big round in Q4 as well, and anything related to delivery as well as obviously growing. So those are some of the trends that we're seeing. But again, we're also really broadening into biotech, life sciences, some hardware and consumer, a bit of fintech, which hasn't always been the case for the Capital Angel Network. So that's really exciting. That's something that we've pushed hard and it's taken a bit more time than we'd like, but now we're really doing our best to serve the entire ecosystem.
And just as a quick follow-up, what are some of the factors that are driving that diversification?
I think it's both just reaching out to new people, and a number of the angels, even if they have maybe a technology or software background, they themselves have a bit more of a thesis around how they want to be investing. And I think I alluded to this even last year, is that people want to be investing with their hearts a little bit more than their wallets, and seeing things that have positive impacts, not just, or places that you can make money. There are good markets, but also have an impact, whether it's on the health or of society or the health of the planet or anything else like that.
I just find that so fascinating. I'd suggest that the word ecosystem is potentially a little bit sort of overused, but to me, this is such a great example of when you hear stories about entrepreneurs making successful exits, that's far from the end of the story. That then they can help use their expertise, use their background, use the lessons learned that they've accumulated to continue to help the Ottawa's tech sector continue to evolve and develop. Susan, I want to spend just a couple moments sort of touching on another theme, which is to really sort of help startups, in Ottawa, help understand how they can access financing. So, just to tap into your expertise a little bit. When should a startup be thinking about pursuing angel financing? When is that typically a good fit for an early stage company?
Excellent question. Like, I think because angels are individuals, it really can vary because it's a person-to-person contract and relationship. But overall, I think when you're going from concept stage into commercialization stage, that's the right time. So you've already done the work to have proof of concept. If you don't have revenue yet, you certainly have shown some traction in being able to close pre-sales. So that then what your funding is going to be used for is the marketing and the expansion of that customer acquisition. I think that's a key component of it, and you want to be able to have your finances in order and have a detailed business plan. So you have to be far enough along the line that you actually can enumerate the details of how you're going to execute your plan in a credible way. Angel investors are unlikely to want to read a large business plan, but they're going to ask questions that are going to flush out whether or not you've thought through those. So it's a key component of it, having your finances in order and having a detailed business plan and having proof that you can, evidence that you are your customers or potential customers are actively seeking your solution. I think those are the key things this is a finance bias. There's a lot of different perspectives to have, and certainly this is only one component of it. So I don't mean to represent all components, but if you're missing that CFO at the table, I think that's a good mindset to think through if you don't have that number cruncher in your founder team.
The finance component is a very, very important component to the discussion, but you did give me a segue there. Nolan, let's get sort of the investor's perspective. What advice would you give to startups as far as when to start the thinking about investment, and really what are some of the early steps that a entrepreneur should be taking to get themselves investment ready?
So I think the biggest piece that might be missing there is that most of these investments are relationship driven. Anytime you can build a relationship with an angel investor, and many of the companies that we see get investment have engaged with the angels, whether it's through advisors or accelerators or things like that, for months beforehand. And then when it comes time to ask for money, the decision is very quick. So it's a bit of a long game than short game. And sometimes having that buy-in from some individuals will lead to more of the network from our end piling in and supporting those companies. I think Susan was right on about being able to project out and understand where you're going and what you're doing with the money. And I would say that the financial element there is core, but that also applies to business plans and again, business plan. You're correct. We don't want to read a big business plan, but projecting, telling the story of where you're planning to go. I think it's very important to understand, where you've been to date, and then project out where you're going. And it's really, does the investor believe that that path is, realizable? And would you have, and with me investing in the company, will that, those projections take place? So I think that's the element, is being able to have enough of a story behind you to credibly project forward. And the investors are really, jumping on board with your story and making that kind of personal connection. So the longer you can build the relationship, the more credible the next part of the story becomes.
Great. That's not only great advice for startups, but I think this has been such a great way to sort of start 2021 with a great look ahead. And I know that Nolan and Susan will be chatting with you again throughout the year, taking a look both at the portfolio companies and that work with the Angel Network, and as well hearing your insights on the tech sector. So thank you so much to you both for joining us.
Thank you so much. It's been great.
Thanks, Peter. Thanks, Susan.
Before I let you go, I want to thank some of our sponsors, without whom this show wouldn't be possible. We have Pearlie Robertson, Hill & McDougall, a leader in business and tech law; TD Bank, with specialized programs for tech firms; the University of Ottawa's Faculty of Engineering, creating the next generation of technical talent; Stratford Managers, providing services to help you scale up your tech venture; and of course, we were joined today by numbercrunch, offering virtualized CFO services for SaaS companies. Techopia is not just this great show. We're also publishing articles online daily at obj.ca/Techopia. You can follow us on social media at Techopia OTT. And if you are watching this on YouTube, please be sure to like, subscribe, and leave us a comment. Thank you so much for watching. I'm Peter Cavesi from the Ottawa Business Journal. We'll be back again in a couple weeks with the next episode of Techopia Live.